What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. In today's video, I want to speak about Cardano USD, so ADAUSD. Now, why do I want to speak about it? Because at the moment, this market is booming and is providing an incredible impulse to the upside with a lot of momentum building in, a lot of hype around it. So today I want to give you guys a full breakdown of the situation that we currently have on it to show you guys an insight of what kind of patterns and price action the market is providing for another potential opportunity, besides the fact if you are already invested in a Cardano USD or not. So let's give a full technical breakdown of the situation that we currently have on it. Now, starting here from the monthly time frame, what we can see now here on the monthly, we can see how the market has just created a huge move to the upside, a huge impulse to the upside. And the last structure that the market has provided here dates back to this level here. In fact, here what we can see is that the market had created a nice impulse to the upside, followed by the correction. And generally speaking, after an impulse and a correction, what you expect is for the market to provide the continuation to the upside, possibly for the creation of a higher high. And in this case, not only we had a higher high, but we actually had a massive impulse to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that first, the market retraced exactly to the 50% of the Fibonacci taken on the impulse, and then exactly from the 50%, the market started the continuation to the upside. It created a higher high, and then the market just exploded, creating all-time highs. So this is the last structure that the market has provided here from a monthly perspective. Now, in this specific case, since the market has just created another impulse, we want to measure the potential retracement. So what we have to do, again, we have to take our Fibonacci from the low to the high of the impulse, which in this case is from this low to this high. And we can see how the 0.382 is exactly at this area. And we do expect the market to provide a retracement at least to this zone before providing a possible continuation to the upside. So on the monthly, the situation is quite clear. Let's go down on the weekly and see what we have from a weekly perspective. Now here on the weekly, we can see how the market has just created a nice impulse and correction. Now on some providers, like for example Kraken, you will see this wick. This wick is actually fake. It's not supposed to be here. And if, for example, we move to any other provider, let's, for example, take a Bittrex, what we will see is that we don't have this wick. It's simply a mistake in the charting and in the pricing. And what we can see, in fact, here on the weekly time frame is that we have a nice impulse and the market has just started the correction. Now again, if we want to measure the potential correction, what we have to do is take our Fibonacci also here in the weekly from this low to this high, because we can see here that from a weekly perspective, we had already created our retracement, printing these red candles here. Now, generally speaking, if you want to measure a correction, as we have already said, we have to take our Fibonacci from the low to the high of the impulse. And again, this gives us at 0.382, which is exactly at this area, and that we do expect the market to create our retracement to before a possible continuation to the upside. So keeping this in mind, let's go down on the daily time frame and see what we have from a daily perspective. If you have any questions or requests for the next video, make sure you leave them down in the comment section. Also, make sure that you smash that like button and subscribe. Now, here on the daily, we can see that there is definitely the possibility to be looking for a potential longing opportunity once more. Now, why is that the case? Because what we can see here on the daily is that the market has just created this low, but at the moment, the market is breaking below this low. Now, in general, If a market prints an M pattern, what you expect is for the market to create a move to the upside, to go and complete the pattern at the previous support, now term resistance. And since in this case, that is exactly what we are creating. In fact, here we are actually creating an M pattern, there is definitely the possibility to see the market create a nice move to the upside to go and complete the pattern at this previous support, now turned resistance. So how we will be approaching this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best timeframe is the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. Now, until everything will remain bearish, we absolutely cannot be looking for any kind of longs. However, if the market will shift from an intraday bearish to an intraday bullish market at that point, we will be adding ADAUSD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete the pattern at this previous support, which is now turned resistance, which is the neckline of the M pattern itself. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also let me know in the comment section below any pair that you would like me to break down in the next videos, and I will also leave a link to the mentorship program in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering any question that you have every single day. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.